Thinking about buying a condo in Toronto in 2026? You're not alone. But before you move forward, there are some crucial insights you need to know. In this video, I'm breaking down the top factors every buyer should be prepared for in the condo market. This is your must-watch guide for 2026. But what if I told you the market could look completely different by the time you're ready to buy? Let's get into it. Before we dive in 2026, let's quickly recap what happened in 2025 with some key numbers. The condo market in 2025, is it stagnation or struggle? For new unsold condos in the city of Toronto during the fourth quarter of 2024, the average asking price per square foot was about $1,500, a 10% decline from the previous peak. Here is the kicker. Experts are predicting further declines in 2025, with prices possibly hitting around $1,400 per square feet in Toronto and around $1,000 in the GTA suburbs. That's more than just a dip. It's a correction that could change everything. On the resale side, condos in the Greater Toronto area had an average price of $682,000 in the third quarter of 2025. A 6 to 7% drop year over year. This shows us the softening market trend. Here is the wild part. Despite the dip, first-time buyers still made up 40% of the market in 2025. It's a proof that even in tough times, there is still a lot of activity. For new condo closing in 2025, Toronto buyers were paying between $1,100 and $1,250 per square foot in prime areas like downtown and King Street West. These areas remain resilient, though we've seen some cooling. One major factor driving this price softness is the over 31,000 new condo completions in 2025, leading to oversupplies. This is creating more options for buyers, especially outside of downtown. What does that really mean for you? More leverage, more negotiation power, and more opportunity than you think. What are the key factors to focus on when buying a condo in 2026? Number one, interest rates and affordability. Interest rates will be one of the most important factors in 2026. If rates stabilize or drop, we could see a boost in buyer confidence. But if they stay above 5%, affordability will still be a concern. Here is what you need to know about affordability in 2026. Mortgage rates will dictate how much buyers can afford. For example, if rate stays at 5%, a $600,000 condo will cost you nearly $3,400 per month in mortgage payments. If rates drop to around 4.5%, that same condo could cost you around $2,900 per month. That's $500 less per month, which could make a big difference. But what if rates stay high? Can you still find a good deal? Absolutely. It just means you'll need to be strategic in where and when you buy. Key factor number two, location. Let's talk about location. It's always the number one rule for buying real estate. But in 2026, location will matter even more. With higher interest rates, buyers will want to make sure their investment holds value. Proximity to transit will remain crucial, especially in downtown Toronto. Future development plans will also play a big role. Condos near future transit stations or commercial hubs will likely see higher demand and better price appreciation. Imagine this, buying a condo next to a new transit station could set you up for future price appreciation. It's not just about where you are now, it's about where the area is headed. Another key factor, development reputation and building quality. When buying a condo, you have to know what you're buying into. Check the developer's reputation, it's vital. Find out what project they've worked on in the past and read reviews from other buyers. Maintenance fee is the next key factor. Check the condo building's maintenance fee. Some older buildings have high maintenance costs that can eat into your investment. Watch the future repairs or special assessment that could come up after you purchase. It's better to know upfront than to get hit with unexpected costs. Here is a tip. If you see lower maintenance fee in the buildings that 10 plus years old, be worried. It could mean big surprise cost down the road. And the last but not the least, Key factor: rental yields and investment potential. If you're thinking of buying a condo as an investment in 2026, here is what you need to keep in mind. Rental yields in Toronto condos will remain steady, but slower growth is expected in areas with oversupplies. Downtown condos or new build near transit hubs should provide stronger rental yields. Are you buying for a rental income? If yes, be sure you're picking an area with high demand. Without that, rental yields could stay flat or even drop. Let me tell you about a buyer I worked with last year. They were torn between a luxury high-rise downtown and a smaller building in Scarborough. They almost went with the high-rise, but when they looked into the developer, they realized they had a history of delays and higher than average maintenance fee. They ended up with a smaller condo and it saved them $100,000. Sometimes buying in a less trendy area can actually be a better investment. What you must know about the condo market in 2026? Expect more price fluctuation in 2026. With interest rates still a factor, price stabilization or small declines could occur in some suburban areas, but prime areas like downtown and King Street West will likely remain resilient. If interest rates drop, condo prices could increase by 2 to 3% in these prime areas, especially in downtown and near transit. Here is the wild card. If interest rates drop earlier than expected, we could see a market rebound, but be prepared, it could come fast. Timing will be everything in 2026. If interest rates stabilize or decrease, there could be more buyer demand, especially in the spring and summer months. The biggest mistake condo buyers make is waiting too long for the perfect property. While waiting for the right time, the market can shift quickly. What looks like a bad price today could be a great deal by spring 2026, especially if rates drop and demand increases. Here is the catch. If you wait for the perfect time, the market could pass you by. Sometimes buying early can be your best move. Will condo prices go up or down in 2026? Here is the reality. If interest rates stabilize and demand for condos remains strong, we could see modest price increases, likely 2 to 3% in prime locations. However, if oversupply becomes an issue or interest rates remain high, we might see price correction in certain pockets of the condo market, particularly in suburban areas. Here is the big question. Are you going to bet on price increases, or will you look for a deal while prices are soft? The biggest mistake condo buyers make is waiting too long for the perfect property. While waiting for the right time, the market can shift quickly. What looks like a bad price today could be a great deal by spring 2026, especially if rates drop and demand increases. Remember this, timing is everything. The perfect property might never come if you wait too long. Now that you know the key trends shaping the 2026 condo market, remember to focus on location, developer reputation, and affordability. Drop your questions below. I'd love to hear your thoughts and help with any confusion on the condo market.